Hey everyone, today I'm going to be talking about ZGNX and the trade that we made it on Friday. This pattern can be really confusing for a lot of traders, especially new traders, but even experienced, even professional traders. This pattern can be really confusing to detect, and it's basically a dip buy and buying over confirmed levels of reversal on the dip buy. So you don't want to catch a falling knife. Um, you got to be really careful trading this pattern. So I want to break it down and help you guys see how to find this pattern in the future. You can see these are the trades we made on it Friday for about 12% in profits. It was an awesome trade. Before we get into that, just want to hop on over here. Remind you guys I'm going to be putting a cap on the amount of people that I let into the chat room. I just want to make sure that I can give everyone personal attention, and I don't want the room to become overcrowded. It's kind of the demise of a lot of chat rooms. Just has too many people, too much noise. You get people pumping stocks and just random stuff like that. And I don't want any of that. I want an elite chat room that is inclusive for beginners and professionals alike. So I am going to be putting a limit on that. Anyways, this is my Twitter. Feel free to come follow me. Also want to hop on over, show you guys the website, kafinvesting.com. There are still spots open. I haven't capped it yet, so come and start your 2-week free trial. Fill this out here. Make sure you put an email that I can reply and send you the link to get in. And obviously, you're watching this video on YouTube. I have a YouTube channel. Feel free to check out my other lessons. So let's break this down. Let's break this stock down. Again, this is a dip buy, buying over confirmed levels. Let's zoom out a little bit to get an idea of what we're working with here. This is a 10-day chart. This stock is down trading basically between about $13 and $15. Now, I want to start off by talking about the catalyst for this huge move. Obviously, almost 400% move from nearly $10 to over $40. Incredible move. So what was it that was moving it? Well, let's go in and take a look at it here. You can see this company released positive phase 3 clinical trial for their drug, and phase 3 is a big deal. Now, with FDA and clinical trials, it can be really confusing understanding what's important, what's not. Phase 1 success is obviously great for a company, but it's not nearly as important, and it won't have as big of a move as a phase 2 trial does. And phase 2 won't have as big of a move on the stock price as a phase 3 trial will, especially a successful phase 3 trial. And so that's what we got out on this one. We got the phase 3 trial. It met the endpoint, and so it was obviously really good news. The stock jumped all the way up to nearly $44 from the previous close of about $12. Okay, that's a huge move, insane move. All right. Now I want to talk about one more thing, and this is called the shock factor. Okay, shock factor is something important to understand in stocks. And what the shock factor is, you can see in days before that this is released on September 29th. You can see in days before September 29th, even the day before here, look at this news article here. There's downside, and it's just really negative. I think a lot of people were anticipating bad phase 3 news on this. It broke an important level of support. It was pretty ugly here. Let's look at this a little closer, and you can get a little bit better of idea. I mean, this was a pretty serious downtrend from $15 all the way down to got as low as $11.80. So I think a lot of people were expecting this news to be bad. All right. So now what does that mean for shock factor? Well, shock factor is obviously kind of self-explanatory, but when people were expecting the news on this to be bad and obviously it came out positive, that means that this jump here is going to be intensified because of the shock factor. Now, if this news was expected to be good, this jump would not have been nearly as significant, and this stock price going into phase 3 trials probably would have done something like this. If the news was expected to be good, it probably would have climbed instead of fallen off. So that's what shock factor is, and I'll talk about that more in future videos. Especially, a shock factor can be a big thing to look into with earnings releases. Is the company's earnings expected to be bad? If they're expected to be bad, then they end up being good. There's going to be a shock factor play, meaning that this jump will be intensified. So let's jump in here to the 1 day 1 minute chart. So hit 44 is part of the shock factor. Hit 43.65 highs in pre-market is part of the shock factor. And I think people woke up that morning and everyone was just cashing out, taking nearly 400% profits from being in back at $10 the day before. This stock definitely changed a lot of people's lives who were in this before this. And so they started selling, taking profits, which is extremely smart of them to do. Took profits all pre-market. There's probably, some funds, maybe some hedge funds and stuff like that, who were waiting for this move and hoping for this move, that wanted to finally clock out and take profits on this. And that's what a lot of people did. There was a ton of selling, huge pre-market volume, you can see here. And the selling even continued. It looked like it might stall out here, but it even continued into market open. So I was watching this very closely, and I was thinking that with this huge sell-off from pre-market highs, there might be a solid chance for a dip buy on here. Of course, you don't want to try to catch a falling knife. Imagine if I try to dip buy this at pre-market right here at 35, and then it drops all the way to 27. That would have been a disaster. That would be the definition of catching a falling knife. So you don't want to do that. You want to wait for certain levels to be broken for a retrace. So sell off, sell off, sell off. This is our first sign right here of somewhat of an upward movement, somewhat of a bullish movement, and it gets rejected at the 29.45 level. So we now have two rejections at 29.45. This little guy right here, which is small, but it's significant in understanding that this is now a level of resistance. Okay, so it comes and it double tops. This is called the double top. When a stock gets rejected at a certain level twice, they call it a double top, which is a bad thing. Now, a double bottom would be a bullish sign. A double top is a bearish sign. So what do we get? We get the expected sell-off off the double top all the way to today's lows at 27.20. Now, I promise you, there's not one person in the world that when this stock was right here at 27.20 saw this and said, oh, 27.20 is bottom, I'm going to buy right here. There's no way to know where exactly the bottom is. There's not. And you could guess, but you also might as well be at Las Vegas playing blackjack or craps or poker or whatever. There's just no way to predict the exact bottom. So instead what we do is we wait for levels to be broken. So after it hits lows here, we see another big bullish move here saying, okay, we're actually getting some buying in here. This is the second time we've seen this. This was really the first time. This was kind of a time, but pretty insignificant. So I want to call this really the first bullish move. This the second bullish move. So it was about this point, as it started to amp up, that I alerted this as a buy to our chat room over this 29.45 level. As you see, this was important resistance for it to get over. So I alerted it as a buy, made sure everyone know not to buy it early, because if this couldn't go over 29.45, then this stock could head down to the low 20s. Who knows how low it could go. But I alerted it here, and we ended up getting our entry right here. This was our entry, our first buy, over 29.45. It's a 5-cent ticker, so we got in at about 29.50, and this thing just took off. This thing really heated up, made a fantastic move up over the $31 level. Now, I actually took profits twice on this. I sold half of my position at about, I want to say the 30.60 area, and then I sold my second half at about 31.40 or so, 31.45. I can't remember exactly where it was. And so my average sell was about 31.05, giving us an awesome plus 5.5% trade. It was a safe trade, reliable pattern, felt great about it. It was awesome. But as you can see, this didn't stop. And so, in fact, even before I got out of my first position, while I was still in my first position, I alerted this as a buy. Let me extend this to help a little bit. I alerted this as a buy over 32.65. Now, why did I alert this as a buy over 32.65? If you want to pause the video for a second and try to figure out why that level is important, go ahead and do that. But I'm just going to go ahead and move forward here. 32.65 is the top of what we see as a little bit of a bullish flag here in pre-market. Obviously, it didn't carry through, but you kind of have this bullish flag here in pre-market, and 32.65 was the top of that. It was also a little bit of support in pre-market here at this level. So you see support, turned resistance. This is clearly a pivotal level for this stock, just like 29.45 was. So I alerted this as a buy again over 32.65. Got a nice pop, little sell-off. We're feeling great about it as long as this level held. And then there was the move we were looking for. A nice $2 share move. It was incredible. I locked in profits at 34.70. It almost hit 38 from which would have been about a $5 move. So I locked in profits early, as I typically do, because I like to secure and lock in profits. I don't like to hold and hope. I don't like to get greedy. I like to lock in my profits as we have them for an awesome 6.3% trade. So this is a very important pattern to learn, and I hope that this video helps you understand why I felt that these levels were extremely important to buy this over. This stock alone gave us about 12% in profits in the chat room on Friday. So again, this is a dip buy pattern. Some important things to realize and that played a role in this stock was, number one, it finally found a bottom and it retraced over very important levels. Number two, this had a great catalyst that made me feel I wanted to buy the stock. For example, if this stock didn't have a great catalyst and they announced something silly like getting a new board member or something, and for some reason it spiked, because who knows, day traders have, they can make things spike for whatever reasons and just play the momentum. I certainly would not have bought this over the 29.45 level if this just was kind of a random spike, if it had no news, or if it was bad news, if it was just kind of fluff news or fake news, as someone who you all know likes to say. So the catalyst is important to understand. I would not have bought this over as a retrace if it didn't have a solid catalyst. That catalyst makes this a great A+ setup. So I hope this is helpful. It was an incredible week for us in the chat room. So much fun to see you guys progress and get better. And I just can't wait to do it all over again on Monday.